low encounter fees, if you will, when the person actually accesses the care. The second type is a PPO plan. That's a preferred provider organization plan, and that is where there's a list of physicians that have agreed to discount their price off of retail. And as I said before, typically that discounts between 15 and 25% off of the retail price, and you can go to that physician for that, and you're protected by contract for the price of the service that you're getting. The characteristic of a PPO plan that appeals to many is that it also has the opportunity to have what I'll call a safety net, which says that if the physician that you end up going to is not a member of the participating network, there still is going to be a benefit paid. But the benefit is typically much lower, the deductibles are higher, therefore your out-of-pocket cost for the individual accessing the service is much higher. But it is there. Under an HMO, if you don't go to the network provider, you have no coverage whatsoever. You're on your own.
So on the HMO, typically the doctor works for the organization, isn't that right? So I'm thinking of like a Kaiser, but maybe that's a more extreme, or?
Well, actually, yeah. In the HMO arena, there's two types of programs, basically. One is a capitated plan, which basically says the physician, the primary care physician, is paid a fee every month for the people that sign up under his name and his number, and then that person is responsible for your care. And typically, if you have a referral, if you need a referral somewhere, that physician would refer you, but refer you only to someone in their own medical group, which is the group of physicians that they've signed up with to execute this contract. So, so that's how that works. The Kaiser scenario is a little different. It's called a staff model HMO, and in that instance, the physicians work for the organization. So it's different than the physicians in a regular HMO or a PPO who are actually out there practicing medicine other than in their commitment to the organization. So in Kaiser, it's a little different. The other option that people might have there is through an HSA plan or a high deductible health plan today, which these plans have really taken off and grown great favor amongst people. Number one, because the premium cost is lower, which is the everyday cost that a company or a person pays, but they come with a higher deductible. So the idea here is that we want the consumer to become more interested in the healthcare decisions relative to do I need this care, do I need to take this medicine, do I need to have this test, and in theory that should help our entire system to reduce costs for unnecessary situations that we have.
Now, on the HSA, we just went through an experience with this, you and I, this year related to one of my employees. And so what had ended up happening was we had a substantial premium increase this year. And so part of what you told me is that the insurance companies are saying that their experience wasn't quite what they expected with these plans.
Yeah, initially, I think what happened, Mike, was that they priced them very low because they wanted people to get involved and they wanted people to embrace them. And they didn't really, at least it turns out that they didn't have a handle on what the experience was actually going to be. So we've seen horrendous increases in the price of these plans. But remember, initially these plans started out at 40% of the premium for a high-end PPO plan, maybe with a $25 copay and a $250 deductible. You get an HSA plan for half the price of that. So even with the large increases, they're still under the cost of the full comprehensive PPO package.
Okay. We need to move on. So what are some important considerations to think about when choosing a medical insurance policy?
Well, I think the thing that people sometimes get caught up with is trying to compare these things on price alone.
Yeah.
And the medical insurance business is a business where you get what you pay for. There's no question about that. So anytime you see something that is substantially less in premium from a quality company, you can almost bet that if you look through and read the fine print and the details, you will find why that is. And it's generally because coverage is limited for certain things, or coverage is non-existent for certain things. And so you need to pay close attention when you're comparing and making sure that you're looking at an equal plan versus an equal plan. The other thing you want to think about is actually, how much insurance do I really need? Do I need to have insurance that's going to cover me every single time I go to the doctor, or could I pay some of those expenses on my own and maybe even not go and get those services and still end up coming out okay? So that's a consideration, certainly, between the high-end PPO plans, the very comprehensive plans, and the HSA type of an environment. Other things that you might consider is, do you need maternity coverage, as an example? And we had this as a situation we had at your office,
right,
where a person did need it and found that a policy that had been presented to them by an internet place didn't have this coverage, and it was important that they had, and luckily they had the opportunity to look through the details to make sure that it was there. The other piece is any kind of alternative care that you might be embracing at this time. For example, chiropractic, acupuncture. Some of these are covered in limited ways, and if you have a need for that, then you should pay attention to those particular types of situation. The critical factor here in most of this is that it's important to deal with a professional agent or broker that can help you to, number one, decide what it is that's going to be best for you, and then number two is to kind of sort through the array of opportunities out there and kind of show you the pros and the cons of each one, so that you can still make a good informed decision, and also that person becomes your advocate, and this is critical in our practice, particularly where people are surprised by the outcome of some of their care encounters, and they don't understand why, and so we kind of step in and help them to by interacting with the provider, with the insurance company, with the HMO, and kind of trying to tell their story in their words to get things resolved in a favorable way for them. So the advocate position, I think, is critically important.
Yeah. So there's a couple of things related to this. So one is, of course, if you have a doctor that you're accustomed to working with, you'll want to see whether that doctor is participating in the PPO or
the HMO. Sure, yes. Absolutely.
And another thing related to what you were just talking about is, sometimes there are just mix-ups related to codes, I've found out, in processing claims and so forth. And so then something gets denied, and maybe if you can have an interface with the doctor or whatever, doctor's assistants, and getting those things ironed out, sometimes if you can just get a code fixed, you can get your claim processed where you may have been frustrated before.
A lot of times it's only that, Mike, and in some cases it's procedures that the insurance company has that may or may not be that friendly to customers, and in many ways our job is to call them to task on this and say, you're not doing the right thing, let's do it, and we're successful many times, and we're unsuccessful sometimes as well.
Okay. What are some of the variables that affect the premium that people pay on these policies?
Well, you can look at the variability of premium, and you're going to think that, in general, the sooner that the HMO or the insurance company, when you have a PPO plan, the sooner they get involved in paying something for your care, the higher the premium cost is going to be for you on a regular monthly basis. So, if you have a $10 copay versus a $25 copay, well, they're going to get involved sooner on that $10 copay, and they're going to pay more. So that policy you would expect to have a higher price. So you look at your copays, number one, for your physicians. You look at copays for your prescription drugs.
Right.
You look at any kind of deductibles that you might have. A deductible would then be required to be paid before any of the other major